1. Crypto market hits $4 trillion, stablecoin bill propels altcoin rally. 2. Crypto sector hits $4 trillion, what it means for investors. 1. Crypto market hits $4 trillion, stablecoin bill propels altcoin rally. An electrifying milestone just rocked the digital asset world. The overall value of cryptocurrencies has exploded beyond the $4 trillion mark for the very first time. This unprecedented surge isn't just a blip, it's the result of a powerful combination of factors, including a dramatic upswing in alternative coins, often called altcoins, alongside the fresh momentum sparked by new, comprehensive cryptocurrency regulations passing through the U.S. legislature. But here's where it gets controversial. Some traders are doubling down, betting that these already sky-high prices could climb even further in the weeks to come. The options market, a segment where investors wager on future asset values, is lighting up, revealing growing confidence that the crypto bull run isn't over yet. For many, this moment feels like the dawn of a new era for digital finance. The approval of major regulatory measures aimed at bringing clarity and oversight to stablecoins, a type of cryptocurrency designed to maintain a fixed value, has set off shockwaves of optimism across trading floors and online forums alike. Supporters argue that these rules could help legitimize crypto in the eyes of skeptics and open the door for broader institutional adoption. And yet, others warn that these rapid market gains, and the very regulations triggering them, might bring unintended consequences. Could increased oversight stifle innovation, or unleash a wave of investor confidence that propels prices into risky territory? Are altcoins truly solid investments, or is FOMO, the fear of missing out, running wild? This is the part most people miss. While rising prices create excitement, history reminds us that crypto markets remain famously volatile and unpredictable. One regulatory headline can make or break fortunes overnight. What do you think? Has the $4 trillion milestone made you more bullish on crypto, or do you worry about a potential bubble? Is the new stablecoin law a step forward, or a threat to decentralization? Share your take in the comments below and join the debate, because the truth is, this story is far from settled. 2. Crypto sector hits $4 trillion, what it means for investors. The cryptocurrency revolution reaches historic turning point as total market surpasses $4 trillion. The unthinkable has happened, cryptocurrencies have officially cemented their place in global finance. What began as a fringe digital experiment has now become a $4 trillion powerhouse that's reshaping how we think about money and investment. And this might just be the beginning of something much bigger. Industry achieves unprecedented $4 trillion valuation milestone. Bitcoin shatters critical $120,000 psychological barrier this week. U.S. lawmakers advance transformative regulatory framework. Financial analysts predict Bitcoin could touch $200,000 before year-end. July 18, Reuters, the cryptocurrency market's total valuation has officially crossed the $4 trillion threshold as of Friday, according to data from CoinGecko, representing a watershed moment that signals digital assets' transformation from experimental technology to a fundamental component of the worldwide investment ecosystem. To put this in perspective, the entire cryptocurrency market is now worth more than the GDP of major countries like France or the United Kingdom. But here's what makes this truly remarkable: this growth comes after the sector weathered multiple boom and bust cycles that many critics believed would permanently cripple digital assets. A perfect storm of renewed market enthusiasm, clearer regulatory guidelines in key jurisdictions, and accelerating institutional investment has propelled the cryptocurrency ecosystem to unprecedented heights. Many industry observers believe we're witnessing a maturation phase rather than just another speculative bubble. In a landmark development, the U.S. House of Representatives approved legislation on Thursday establishing a comprehensive regulatory framework for dollar-pegged cryptocurrency tokens, commonly known as stablecoins. These digital assets, which maintain a steady value typically matched 1:1 with the US dollar, serve as crucial bridges between traditional finance and the crypto ecosystem. The bill now heads to President Donald Trump's desk, where he is expected to approve it, marking a dramatic shift in the government's approach to digital assets. The emergence of Trump-backed legislation represents a complete reversal in official attitudes toward the cryptocurrency industry, though lawmakers continue to exercise a degree of prudence in their approach, explained Darren Nathan, who leads equity research at Hargreaves Lansdown. But the regulatory momentum didn't stop there. House lawmakers also passed two additional cryptocurrency-focused bills that will next face Senate consideration. One establishes a broader regulatory structure for the entire cryptocurrency market, while the other, and this is where it gets controversial, specifically prohibits the United States from issuing its own central bank digital currency, CBDC, a move that puts America at odds with many other major economies actively developing such instruments. The $4 trillion valuation benchmark underscores the remarkable evolution of the cryptocurrency industry from its speculative, obscure beginnings to its current position of growing influence. With increasing participation from traditional asset management firms, the introduction of new exchange-traded products, and broader adoption across both retail consumers and corporate entities, digital assets are increasingly driving conversations at the highest levels of global finance and policy. For newcomers to the space, stablecoins function as a critical infrastructure component within the cryptocurrency ecosystem. Unlike volatile assets such as Bitcoin or Ethereum, stablecoins are specifically engineered to maintain consistent value, typically anchored to traditional currencies like the US dollar. Cryptocurrency traders frequently use them to transfer funds between different tokens without converting back to fiat currency. Their usage has expanded dramatically in recent years, with advocates suggesting they could revolutionize payment systems by enabling instantaneous transfers without traditional banking delays. The Genius Act will be remembered as historic legislation that provided a crucial foundation for bringing cryptocurrency fully into the mainstream as a legitimate asset class, stated Chris Perkins, president of investment firm Coin Fund. This represents the beginning of a new era where digital assets receive the same regulatory clarity.